traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is August the 2nd, it is Monday, and this is the Daily Report. Forex Gold is currently trading at 1181.65. It has had a high today of 1191.60, a low of 1174, and we are seeing the market itself today form into a doji again. We've got another doji in the marketplace here in Forex Gold. This very high and this low in the form of the doji is indicative of what we're witnessing in the market, and that's kind of a push-pull. First, you have the U.S. stock market indexes as well as a lot of the commodities future markets, and they've been solidly trading to the upside throughout the day. And what that points to is the fact that many investors right now are looking at what's considered to be riskier assets, and they are backing away from safe haven assets such as gold, and that's according to Jim Wyckoff over at Kitco. Now, the U.S. dollar index was lower on Monday. The euro was firmer, which also hints at better investor attitudes towards the European Union in recent weeks. Now, aside from what we'll call fundamental news, if we strictly go to a technical interpretation of the market, as you know, I am looking at the following scenario, and that is we have begun this was our A wave right in here, and now we're looking at our B wave, and as I said, I'm looking for that B wave to come roughly to the 1212 area, somewhere between here and about the 1235 area. That's 75%, and this is 50%. But realize when we look at Elliott wave itself, I typically talk about the large moves or the large waves. There are subwaves within all markets, and let me show you what I mean by that. When you look at classic Elliott wave theory, and this, of course, this information comes from his book Masterworks, which is a collection of all of the information from Elliott wave, all of his writings, what he talks about is on a typical move up, meaning the impulse waves 1, 3, and 5, it's typically going to be what's called a 5 count. Here is that, what we're looking at here is that wave 3, wave 4, and wave 5. This is the A wave, okay? When you see me typically draw these waves, as you know, I will typically draw, for example, the A wave from here to here. But within that, on what is called either corrective wave, you typically get a 3 count, which means that within this longer wave, you're going to get this following activity. It's going to have go to a low, come back up, and then come back down. So you get what we call a 3 count. On a long impulse wave, it's typically going to be a 5 count. So you get this 1, 2, 3, 4, and 5, all within this third wave up. So that the reason I bring that to our attention is if in fact this market moves up a little bit more and then comes down and then goes up, that is still going to fall within the realm of what we typically look at for this type of a wave. In other words, we would be looking for about a 3 count within this B wave itself. Now, the reason that I bring it up really is twofold. One, that doji. Anytime I see a doji, of course, I'm absolutely looking at the potential for the market to consolidate and reverse, and we absolutely have a doji in here. The other thing that I'm looking at is where that doji's been placed. It's placed at a pivot point. When we look at our 38% retracement, as you notice, we're falling right within that area. So what we've noticed is the market's come down. It has formed a tentative bottom, there's no doubt, with this doji right in here. However, at the same time, we absolutely have to be cognizant of the fact of where this doji is coming into place. In other words, we do have the market moving up. However, at the same time, it is moving up and forming a doji right in here. That tells me that we might in fact see the market backtrack down a little bit and then move back up to this direction, all within that B wave right in here. Of course, what would negate that is if the market came down and, of course, made a new low, or in fact broke this support level at 50%. Of course, my overall prognosis or forecasting of the market hasn't really changed. If we take a look at the big picture, and on the big picture, of course, we're looking at our first corrective phase happening here, back starting in that one particular high, 1221, back in December, taking us all the way to February. I'm still also looking at our impulse phase, which is these 5 waves right in here. And then again, of course, the beginning of this corrective wave right in here. I still am looking at this as our B. The market is still trading, so we want to see this could end up not being a doji. My sentiment is it probably will, though. And we will look for this market, as I said, within the confines of the way a B wave should trade, meaning having that 3 count. I think that we might see a small dip in the market here and then back again higher. But I do think that the market itself is probably going to run out of steam, as I say, at this 23% level. Although it can go higher up to about the 36, I personally don't think right now it's going to have the power to move up that high. So my recommendation is we will obviously maintain our position. We want to look at it very, very carefully, and we also want to look at indications of how this B wave wants to trade. This has been Gary Wagner with WFGForex.com, wishing you, as always, good trading. We'll talk to you tomorrow. Bye-bye.